Right now, there is a strange feeling moving through the financial world. You can sense it in the headlines, you can hear it in conversations, and you can see it in the way markets are reacting day by day. Curious, something feels different. For months, people believed the economy would simply keep moving forward, maybe a little slower, maybe a little faster, but still stable. But suddenly, the tone has changed. Oil prices are rising again. Growth is showing signs of fatigue. Debt pressures are appearing in places that investors once ignored. And at the same time, gold and silver are quietly climbing higher. When assets like gold and silver begin to move like this, it usually means the market is starting to ask deeper questions. Investors are not just thinking about profits anymore. They are thinking about protection. They are thinking about uncertainty. Size. They are thinking about what happens if the future does not follow the comfortable path everyone expected. And that is why people are now talking about a word that has the power to make markets nervous almost instantly: stagflation. It is a word that carries a lot of weight because it describes one of the most uncomfortable economic situations possible. Growth slows down, jobs become harder to create, businesses struggle to expand, and yet prices refuse to fall. Everything becomes heavier, everything becomes harder. But here is the important thing: just because the word is being spoken louder does not mean the story is already finished. Markets move on expectations long before reality fully arrives. Fear can spread faster than facts, and when emotions rise, people often rush to conclusions without taking the time to understand what is really happening beneath the surface. That is exactly why moments like this require calm thinking, clear analysis, and a willingness to slow down and look carefully at every signal the market is sending. There is one thing that happens again and again when markets enter uncertain territory. Noise becomes louder than truth. Every headline starts to sound dramatic. Every price move gets treated like a final answer. One moment people say the economy is collapsing, the next moment they say everything is perfectly fine again. The voices get louder, the opinions get stronger, and the confusion grows. And for ordinary investors watching from the outside, it can feel overwhelming. That is exactly why moments like this require something very simple but very powerful: clarity. Because behind all the noise, behind all the opinions and predictions, the market is actually telling a story. But you have to slow down enough to hear it. You have to separate emotion from evidence. You have to step back and ask the right questions. What is really moving gold and silver right now? Why are investors suddenly talking about stagflation again? Why are debt signals from places like Greece beginning to appear on market radars? And what do these pieces mean when you place them together instead of looking at them one by one? When you begin to look at markets in that way, something interesting happens. The fear starts to lose its power. The confusion begins to clear. Instead of reacting to every headline, you start to understand the bigger pattern forming underneath the surface. And that pattern is where real insight lives. Markets are not random chaos. They are signals. They are reactions to pressure, to policy, to confidence, and to uncertainty. When you understand how those forces interact, you stop feeling lost in the noise. Instead, you begin to see direction where others only see fear, and that ability to step back and focus is one of the most powerful advantages any investor can have in uncertain times. Now let's talk about something that many people misunderstand when they watch the markets. When gold and silver start rising, some people immediately think it is just another short-term trade. They think it is only speculation or excitement from traders chasing quick profits. But history tells us something very different. Gold and silver often move when deeper pressure begins to build inside the global financial system. These metals have been trusted for thousands of years, long before modern stock markets, long before central banks, long before digital currencies. People turned to gold and silver when the future felt uncertain, not because they were exciting, but because they were reliable, because they represented something real in a world that could suddenly become unpredictable. And that is exactly why their movement today matters. When investors quietly begin shifting attention toward gold and silver, it usually means confidence somewhere else is becoming fragile. It means people are asking tougher questions about inflation, about debt, about economic stability, and about whether traditional assets can still protect their wealth in the same way they once did. This does not mean the world is ending. It does not mean markets are about to collapse tomorrow morning. But it does tell us something important about the psychology of investors. It tells us that caution is growing. It tells us that people are preparing, not panicking. They are adjusting their position in a world where the economic weather may be changing. Think of gold and silver like early signals on the horizon. Just like sailors once watched the sky and the wind to understand whether a storm might be forming, investors watch the behavior of these metals to understand where trust and fear are moving in the financial world. They are not perfect predictors, but they are powerful indicators of shifting sentiment and deeper macro pressure. There is another signal appearing in the background of this story that many people are starting to notice, and that signal is coming from Greek debt. Now, at first glance, this might sound like a small issue. Greece is not the largest economy in the world, and it does not control the direction of global markets by itself. But experienced investors know something important about financial stress. It rarely begins in the strongest places. It usually begins in the areas where the system is already a little fragile. When bond yields in countries like Greece begin to rise, it tells us that investors are becoming more cautious. Bond yields move higher when lenders demand more reward for taking risk. It is the market's way of saying that uncertainty is increasing. It is not always a crisis, but it is a signal that the environment is becoming more complicated. Think of the global financial system like a huge network of connected pipes carrying money, credit, and confidence. When pressure builds in one corner of that system, it can slowly travel through the rest of the network. Sometimes it spreads quickly, sometimes it spreads slowly, but the early signals often appear in smaller or more sensitive areas first. That is why movements in Greek debt matter more than they seem. They remind investors that financial stability is never permanent. Even when things look calm on the surface, markets are constantly measuring risk beneath that calm. When energy prices rise, when growth slows, and when debt becomes harder to manage, the weakest points begin reacting first, and those reactions act like warning lights on the dashboard of the global economy. They do not mean disaster is guaranteed, but they tell investors to pay attention, to watch the signals carefully, and to understand that even small shifts in confidence can ripple outward and influence much larger markets around the world. What makes this moment so powerful is that the changes are not happening in one single place. They are appearing in many corners of the financial world at the same time. Oil prices are climbing, gold and silver are moving higher, debt markets are sending small warning signals, hiring is starting to soften, credit conditions are becoming tighter. None of these pieces alone would necessarily change the whole story, but when several of them begin moving together, the message becomes much harder to ignore. Markets are like living systems. They react to pressure, to fear, to confidence, and to expectations about the future. When everything is strong and stable, money flows easily. Businesses expand. Investors feel comfortable taking risks. But when uncertainty begins to grow, that flow starts to change. Investors become more cautious, companies become more careful, and the entire financial system begins adjusting to a new environment. This is the stage where markets start shifting beneath the surface. At first, it happens quietly. The headlines might not fully capture it yet. The stock market may still look relatively strong. Many people might believe nothing serious is happening, but experienced observers know that the early stages of change rarely look dramatic. They look subtle. They appear as small signals scattered across different markets. Those signals slowly connect together to form a larger picture. Rising costs begin pressuring businesses. Slower growth starts affecting confidence. Debt becomes more expensive to manage, and investors begin searching for assets that can protect them if conditions become more difficult. This is why moments like this are so important to understand. They represent the turning points where the economic story can begin shifting direction, not through one shocking event, but through a gradual buildup of pressure that spreads quietly across markets, shaping the behavior of investors long before the final outcome becomes obvious. One of the most powerful advantages an investor can ever have is the ability to understand what is happening before the crowd fully realizes it. Markets reward people who pay attention early. They reward patience, awareness, and the willingness to study signals that others ignore. When the world becomes noisy and confusing, most people react emotionally. They chase headlines, they panic when prices fall, and they rush into trades when excitement grows. But the investors who truly succeed learn to pause, observe, and think clearly while everyone else is rushing. This moment in the market is a perfect example of that opportunity. Many people are only reacting to the surface story. They see gold moving, they hear the word stagflation, they notice stocks shaking, and immediately they assume they already know the ending. But the truth is that markets are rarely that simple. Real understanding comes from connecting the pieces together and seeing the bigger pattern forming behind the scenes. When you take the time to study the signals, something powerful begins to happen. Confusion starts turning into insight. Fear starts turning into awareness. Instead of feeling like you are chasing the market, you begin to feel like you are reading it. And when you can read the market, you gain confidence that most people never develop. This is not about predicting the future perfectly. No one can do that. It is about recognizing the direction of pressure while the majority of people are still distracted by short-term noise. It is about understanding the environment early enough to prepare, to adapt, and to make thoughtful decisions instead of emotional ones. And in times of uncertainty, the investors who stay calm, curious, and disciplined are often the ones who see the opportunities long before the rest of the world catches up. And this is exactly why conversations like this matter right now, because markets are entering a moment where attention, patience, and awareness can make an enormous difference. The signals are there. Gold and silver are moving. Debt markets are whispering warnings. Energy prices are creating pressure across the global economy. These are not random events. They are pieces of a larger story that is still unfolding. Many people will ignore these signals until they become loud headlines. That is how human nature works. Most people wait until the situation becomes obvious. But by the time everything feels obvious, the biggest moves have often already happened. The people who benefit the most are usually the ones who were watching earlier, learning earlier, and preparing earlier. Think about every major market shift in history. The early signals always appeared quietly at first. A few price changes here, a few unusual movements there. Small signs that something underneath the system was beginning to change. Only later did those small signals grow into full market stories that everyone could see. That is why this moment deserves attention. Not panic, not fear, but attention. Because understanding the forces shaping the market today gives you the power to move with clarity instead of confusion. It gives you the ability to think long-term while others are reacting minute by minute. Markets reward people who stay curious and disciplined when uncertainty rises. They reward those who listen carefully to what prices, credit, and confidence are quietly saying. And right now, those signals are telling a story that is becoming more important with every passing day. The real question is not whether the market will move. Markets always move. The real question is whether you are paying attention early enough to understand the direction of that movement while the story is still being written.